You recently are starting to feel a little bit more negative. Why?
You know, post-Fed, I thought, okay, this can run a little bit longer. I haven't liked how the market's traded very much. You've continued to have this rally in the Russell 2000, the small caps, CRE, small banks. It's been a phenomenal rally. Russell 2000's up 17.5%, 18% since November 7th, and yet everyone still wants to talk about Magnificent Seven. And NASDAQ 100 has not done much since early December. I think it's up 2%. And the way things have traded, I don't like. I think yesterday was a precursor that instead of buying the dip, I think you're supposed to sell into this. I think we're going to feel a little bit pressure on the big caps coming into the new year.
And do you think that this is going to come from people who are worried about recession? Do you think this is going to be technical? Do you think that there is just some sort of pressured selling that is overwhelming any of the narratives that people are trying to come up with on the back end of them?
I think, as you said, all the bears got shot, so that money got forced in the market. People are already long anticipating, the year-end flows you're going to get, the early year flows you get as RIAs start funding. And I think that's just overdone, and people got too excited. And the one big problem with these large caps is if there is selling pressure, the market caps are so large, it's very difficult to absorb them. And one thing that really triggered me is probably overnight, I kept reading how yesterday everyone wants to blame zero-date expiration options for why we sold off from 2 to 4. If you go back 3 of the last 4 days, from 2 to 4, we had these weird spikes, which were probably largely due to zero-date expiration options. So when people highlight something as a culprit, it tells me everyone's kind of long and is looking for an excuse of why they were wrong yesterday. And that's why I think there's more staying power to selling pressure right now.